This is the weekend edition of Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Fired up today, got my cup of coffee, ready to go.
Goodness me, the last thing you need is coffee when we go into this because you always come quite fired up already. Bordering on aggressive, I would say.
Right. There you go.
Yeah, a little bit of a character assassination there just to begin, hopefully trying to curry some favour with the judge here. Who is Adam Lang, our colleague from Fear and Greed. Adam, good morning.
Good morning, Michael. I have some warm, sedating cocoa with me.
That is very Adam Lang.
It is very Adam Lang, actually.
It actually has 2 coffee shots in it.
Oh, well played.
That actually is Adam even more so. Like on the surface, warm and cuddly. Underneath, hard aggressive.
That's right. And so, Adam, your job today obviously is, as always, to help us decide some winners. We're looking for the biggest story of the week, the most remarkable story, the sleeper story, and then our favourite story. We have discussed many times in previous weeks the kind of wide-ranging criteria that you pick from, and you don't tell us which criteria you're actually kind of working off. So it's a bit of a mystery, a bit of a gamble. You just kind of throw all the darts at the wall and various other things. Just toss it all up in the air and see what works out for us. So, Sean, do you want to go for the biggest story first?
Sure.
And that way we might get a bit of an idea on what Adam's looking for, and then I can tailor my story before I have a go.
Yeah, well done. No, in fact, there were 2 big stories. I reckon you'll take the other. I'm taking the economy, though. The economy. Couldn't get enough of it this week. First off, we had inflation figures out from the Bureau of Statistics. It showed headline inflation at 6.1%. That's the highest since the GST was introduced in 2000. Underlying inflation, which is the one the Reserve Bank looks at to make decisions about interest rates, it jumped 4.9%. Now, that was the highest since 1991. Inflation is rampant, but, big but, it's not quite as bad as people thought it might be. And compared to the UK, US and New Zealand, Australia is doing pretty well. The next day, Jim Chalmers, the Treasurer, came out, pretty happy sort of chappy normally. He was miserable. He came and gave a budget update, which basically hammered the economy. He said inflation is heading towards 8%. Unemployment, which is at 3.5%, is going to start creeping up. We've got about $1 trillion in debt. We've got all sorts of structural problems. Mind you, commodity prices will help last year's federal budget deficit. That was about the only good news. For most of us, it's about wages. When will we actually find the cost of living, the pressures of the cost of living easing? Not till 2024, because there won't be a rise in real wages until then. That's because inflation will remain high until about 2024. It's a bit miserable all in all. Mind you, on the same day that he was speaking, Glenn Stevens, the former Reserve Bank governor, came out and he said that Australia should be alert for a recession. So he wasn't exactly upbeat either. Anyway, massive week for the economy. It leads into next week where the Reserve Bank board will decide whether or not to lift interest rates for the 4th time. Michael.
Big stories. Many stories combined into one there, and they are all big. Well played, you. Look, for me, it was quite simple. The biggest story this week was the fact that the 47th Parliament kicked off this week. And suddenly, at last, it's business as usual in Canberra, because the last few months have been pretty extraordinary when you think about it. After an election win that booted out a Conservative government after almost a decade, Anthony Albanese and his team embarked on really what can only be described as a foreign affairs blitz for weeks on end, crisscrossing the globe. Now, that's all done. That's all behind them. And the resumption of Parliament means question time is back. You've got 16 crossbench MPs in the lower house, guaranteeing that some of the questions might actually be on policy. What a novel thought that would be. Speaking of policy, a massive legislative agenda for the new government to get through. You've got really kind of meaty stuff like aged care reform and climate change policy, but all, as you said, Sean, really with the economy front and centre. Adam, the personalities are back. The partisanship is back. The theatre is back. The drama of it all is back. Let's see how it goes. And of course, it all flows through to business.
Michael, that was very well sold.
I love that last sentence, and it all flows back to business.
Yeah, without actually demonstrating the connection. Anywho, 47th Parliament begins, our most diverse Parliament ever. Question time back, legislative agenda, all very exciting. However, it is bigger news on the inflation, biggest in 20 years, and that was provoked by a GST, 6.1% headline. And I loved your line, Sean, a miserable treasurer Chalmers and no hope of real wage growth until 2024. My God, what a massive story. So that has to win for the biggest story of the week. Well done, Sean.
Thank you.
Yeah, well done. And look, it was a
through gritted teeth.
No, yeah, absolutely. No, I'm very happy for you. And you might have guessed that line there at the end about it all flows back to business.
Tailoring
was just an ad lib. I just tossed it in there on the off chance that it might get me across the line. But hey, that's all right. That's all right. Let me see if I can draw some more tenuous business links with the most remarkable story.
So, what's the most remarkable story of the week for you, Michael?
Well, for me and Adam, without kind of making any assumptions about how you like to spend your Friday night or your Saturday night or your Friday day or your Mondays, it's all about wine.
Oh, ouch. Not cider, but wine.
It's all about wine. We learned this week exactly how much damage China did to the local wine industry by slapping those really prohibitive tariffs on our exports. Sales to China have gone from $1.1 billion a couple of years ago to just 25 million, which is just extraordinary. But what might have been a truly devastating story kind of has a bit of a silver lining because the industry's diversified. Overall exports have fallen, but last year they were only down 19% in value. And if you take China out, exports actually increase by 5% to $2.06 billion because we found new export markets. So the US is now our largest of 113 destination markets, followed by the UK, Singapore, Malaysia, Thailand, even New Zealand are all on the list there now. I know it's an overused term, and so I know this is risky actually even mentioning this, Adam, but it seems like the wine industry was pretty agile on this one.
We better have a huddle about that.
Quick to shift their focus away from China to other markets. And I just think that is absolutely brilliant how they've been able to do that. And hey, if China then does come back on at some point, then it means that we have got a much stronger wine export market and industry there. So I think put it all together, remarkable. And it all flows back to business.
Do you know what I love about that story most of all? Is that New Zealanders are buying more Australian wine.
Yes.
I'm sick of buying their wine. I buy it all the time. It tastes so good. I'm just pleased that we're selling some to the Kiwis.
Yeah, well said. What was your most remarkable, Sean?
Mine was very specific, and it was literal about what was remarkable this week, because this was truly remarkable when you watch share markets. It's what's happening to the share prices of buy now, pay later groups, Zip and Sezzle. Now, remember, they dropped plans earlier this month to merge, and it was portrayed as Zip dumping Sezzle. One day this week, Zip's shares jumped 20%. The next day, they jumped another 20%. What was the news that spurred this on? Absolutely nothing. Sezzle was even more remarkable. On Wednesday, it doubled. Its share price literally doubled. It then went into a trading halt because that just doesn't happen. And the next day, there's no news. Next day it reopened, it went up another 40%. Now, both stocks are well below their peaks of 2021, of early 2021. But in terms of a remarkable story around price action on the share market, for a stock that isn't a penny dreadful, it's known to jump 100% in one day is just ridiculous. And then 40% the next day, then in Zipco's case, 20% and 20%. Truly remarkable. Adam.
Both are very good. So well done to both of you. I have to give this one to Michael. I think the Chinese tariffs on wine, they've whacked us so heavily with those punitive tariffs, and we've responded. As a country, as an industry, our export authorities, our trade development, I think that is awesome.
And you've done your bit personally as well, haven't you, Adam?
I didn't export any.
Absolutely not.
No, but just tried to prop it up domestically.
I tried to keep it here. But great use of the buzzword agile in there too. Sean, it is really remarkable, the buy now, pay later, particularly Zip and Sezzle, and it's all based on no news, right? It's just what is happening.
Yeah.
But just because of the narrowness of the story was the only reason I could give that to Michael.
Fair enough. I do wonder what will happen with whether something will emerge.
Yeah, it has to, doesn't it? There has to be something driving this.
Yes, I think this is certainly one to watch.
Oh, maybe it was a sleeper story.
Ooh, maybe I should have swapped it into sleeper.
That's okay. In about 30 seconds, we just hear the same story repeated. All right, we'll be back in a moment with the sleeper story of the week. All right, Sean, we're looking for the sleeper story of the week. So one that's maybe flying under the radar a little bit or could potentially become a bigger story down the track. So is it buy now, pay later stocks for you?
No. This is a sleeper story. Mostly, there's been a lot of news around this week, Parliament and economics obviously being the big ones, what's been happening on the share market. But two of the big banks, Westpac and Macquarie, came out this week and said that they're going to reduce their lending for oil and gas. That in itself isn't totally unusual. All the banks have been talking about it. Why this week I think it's quite remarkable is that it was the chair of Macquarie Bank, Glenn Stevens, and the boss, the CEO of Westpac, Peter King, both coming out and telling shareholders that's what they're going to do. It's happening at a time when fossil fuels are doing really, really well. So as an investor, as a financier, you want to be in fossil fuels at the moment. Think of the energy stocks, Woodside, Santos, the coal plays like Whitehaven. They're doing incredibly well at the moment. In fact, green portfolios have really underperformed over the past 6 months, mostly because energy portfolios, the fossil fuel portfolios, have done really well. In the midst of this, for two of the biggest companies in the country to come out and say, we're withdrawing from that, that's really big news. And it didn't get a lot of attention this week. Banks are always criticised for lending to fossil fuel companies. However, they do it. It's part of their business. Both are now saying we are going to put pressure on those oil and gas players to transition quicker because we're not going to give them as much money as they might have got last week. Quite an incredible story, that, and there wasn't a lot made of it this week. My sleeper story for the week.
Yeah, that's a ripper. All right, look, my sleeper story, and Sean, as soon as you mentioned this one during the week, I kind of had to jump in and reserve it. Well, actually, once you'd explained to me what it actually meant, because I didn't get it at first. So this story might actually just sting just a little bit because you're going to hear a lot of your own words repeated back at you.
I wouldn't trust them.
That's right. So APRA, the banking regulator, wants to create a new...
Hold on. Michael, you are giving us a story about the Australian Prudential Regulation Authority. This will be interesting.
I understand it quite well because after you mentioned it, I went and did a significant amount of additional research. And so I would
came
actually
up the same words that I used.
Yep. Sometimes simplest is best, Sean. And when you're using such simple language, I'm going to stick with that. Now, APRA, the banking regulator, don't ask me what APRA means. No, I'm just kidding. I do know. Wants to create a new standard for third parties involved in financial services. So the way I like to think of it, now that I understand it, Sean, is that banks and super funds and the rest are great innovators, right? Which is actually kind of impressive on its own when you've got organizations that are 100 plus years old in some cases, and that they are some of the best innovators in the country. They are embracing technology and working with kind of fintechs and the like really like never before. A lot of those third parties are unregulated in terms of their involvement in financial services. So now APRA wants to change that to improve risk management. It's good for consumers, really great for kind of safety of data and everything, particularly as we're moving into the open banking space. But it is a big, big change. It is a great sleeper story, and I'm so glad that I grabbed it first. Adam.
Well done, Michael. An excellent pause at the end there too. Sean. Environmental, social and governance. This really was, with Westpac and Macquarie, the environmental factors being highlighted. And I thought they really were important to note. Sleeper story. Excellent. Michael, on APRA and the members embracing technology to improving risk management. And as we saw this week too, the prospect of a loan application being processed in 10 minutes. My God, what that could mean. So, Michael, you win on the sleeper story of the week, a narrow victory over Sean.
Is it because of the loan thing? Because I didn't actually mention that.
It's all of the above. It's an ensemble win, Michael.
Fantastic. I will share the victory with you, Adam. Thank you. All right, let's get on to the favourite story of the week. I'll go first on this one, if that's all right, Sean.
Sure.
So there was a lot to choose from this week. There was actually a lot of stories that could have fit into this category, and I landed on this one. And It's probably not my normal one that I would go for. I'd normally go for something about aircraft.
Look, last week you went about exploding whales, Michael.
That's right. And the week before it was barbecue sauce. So
eclectic is your interest in this particular category.
That's right. I'd forgotten about the exploding whale, and I am still outraged at the injustice that did not win. Anyway.
Why did I mention it?
The story that I've chosen this week as my favorite is the fact that French authorities are going to be fining shopkeepers who leave the door open when they've got the aircon going. It makes sense when you consider there's been this heat wave rolling through Europe and an energy crisis. So governments are cracking down. If a French retailer fails to shut the door when the aircon's running, that's a €750 fine. If you've got an illuminated sign on between 1 a.m. and 6 a.m., €1,500. It's part of a really much broader plan to reduce energy reliance on Russia in case the gas supply is cut off. France wants to actually cut their energy consumption by 10% in the next 2 years. That is big and in a short period of time. The best part of it, though, is the fact that they call it an energy sobriety plan. I just love that.
There's a certain irony that the French would call it an energy sobriety plan, don't you reckon?
It's the only thing they're capable of being sober in, their energy usage. I just love it. An energy sobriety plan just tells you exactly what it is. It's fantastic, a colourful name, really. And look, I've got no exploding whales, no campaigns against barbecue sauce at Bunnings sausage sizzles, a really kind of sensible business-related topic for me from the favourite story of the week.
That didn't work on the bigger story of the week, the business-related line at the end.
Maybe it will this time. I live in hope. I'm a very optimistic fella.
I myself, of course, am appealing more to Adam's great love of music for my favourite story.
Well played.
So Adele, the British star, has taken a short-term residency in Vegas's Caesars Palace. Where else? And apparently tickets on the reseller platform StubHub are going for between $600, I could probably stomach that, up to $41,000 for one ticket. Incredible. Now, residencies in Vegas actually began years ago. Well, Liberace was the first person to have a residency on Vegas, and then Elvis really made it famous, particularly for more popular music, when he took up a residency as well. The movie Elvis, which is running around at the moment, tells you all about that. Plenty of people have done it. Lady Gaga, Britney Spears, Katy Perry, Bruno Mars. The one who had the most lucrative residency was Celine Dion. She was at Caesars from 2003 to 2007, and apparently that brought in about $385 million. Incredible. Anyway, Adele's residency, it's from November through to March this year. It's weekends only, $41,000 for a ticket, the highest ever commanded. Definitely, and I don't even like Adele. She's beautiful voice, etc. But she's not my style of music. Obviously, incredible star. Favorite story though: $42,000 for a seat. Whew, good on her.
Adam,
okay, I loathe scalpers, and so this site StubHub, gathering tickets and reselling them at exorbitant rates.
Have you never used StubHub in the States?
No. Never use scalpers.
No. It's kind of like a semi-regulated reseller.
I think there's a lot in the semi-regulation in that area.
Like I've been to basketball games and things like that through StubHub. Love StubHub.
Maybe I should open my mind.
We need to get APRA onto regulating that as well. Now that I'm all over APRA and regulation. Carry on.
Yeah, good point.
So those ticket prices are insane. And look, apparently she puts on an incredibly good show. So a very, very good story. I'm going to give this one to Michael, though. I think the French energy sobriety plan has to win for the favourite story. I think it's just incredible. So well done, Michael.
Oh, thank you, Adam. And may we have the overall scores?
Yes. Look, Michael,
3-1, I think.
Yeah,
is the
3-1 on the story. But would you like to know the points count?
Yes, please. Yes.
Okay. So you're on 85 points, Michael.
Had the one put 9, Pythagoras' theorem. Now square root of that.
This is incredible. I'm having to do a recount. It's so close.
Yeah, just need the Excel spreadsheet. Just hold on, a few clicks of the mouse here.
God, Sean, you've won on points. 86 to 85.
Goodness me.
Sean gets 1 story out of 4. Michael gets 3 out of 4. But in a Stephen Bradbury moment, Sean wins on points.
There must have been a massive margin on that first story then.
Yeah, 5-point margin on the first one.
Oh, and the rest were close. Okay.
There you go.
And
God, it's been exciting here this morning, hasn't it?
We've had the benefit of listening to Adam do maths live for about the last 3.5 minutes.
I had to do it 3 times. I couldn't believe it.
There we go. I think we've successfully covered all the main stories today. That's the key, that we've really covered everything from APRA through to Parliament, all the big ones.
And it all relates back to business.
That's right. It all links back to business. There we go. Thank you very much, Adam.
Thank you, Michael.
And thank you, Sean.
Thank you, Michael.
Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson. Have a great weekend.